Amagi Media Labs is a SaaS company for global media companies. Now the company is coming up with its IPO, and joining me to talk more on this is Bhaskar Subramanian, who's the co-founder and CEO of Amagi Media Labs and CFO of Amagi Media Labs, Vijay NP. Thank you for joining us on NDTV Profit.
Thank you.
Thanks for having us.
I want to start by asking you that, for viewers who are new to the story, what does Amagi Media Labs do? And, how is the streaming platform space advertising growing, and how do you see that as an opportunity right now?
So Amagi is in the media technology software business. We're a SaaS company focusing on providing solutions for TV channels, content producers, sports, news, entertainment, any sort of content, studios that create content. So our customer universe that's the customer universe that we work with today. What do we provide them? If you look at it, I'm sure all the TV channels are today running a lot of hardware, data centers, satellite communications through which things happen. We bring in a complete internet-based model where the software runs on a cloud so that our customers can produce their content completely on a software cloud basis and eventually be able to distribute it worldwide. That means you can take your content wherever your consumers are or viewers are, you take the content and eventually also be able to advertise and monetize that. So we provide a full end-to-end solution for our customers, what we call glass to glass, starting from the camera lens till the point of people watching on their phones or on television screens. We provide them an end-to-end capability as a software company. That's what we do today.
All right. So the IPO is about 1,788 crore with a mix of fresh issue and offer for sale. Now, how will the proceeds be used? Will it be used for global expansion, acquisition, or tech spending?
Yeah, no, great question, Ridhima. So we have sort of two broad buckets on how we'll deploy these funds. One is we are an engineering-driven company. So a lot of it, we've been at the front and center of innovation. There's a lot of money will be invested for forward-looking growth because we still see that there's a lot of runway in this industry and we're just getting started. So a good chunk of the proceeds would go towards growth-oriented investments. The second half is historically we've organically grown a great deal as well. Opportunistically, we look for inorganic acquisitions where the price is right and where there's a strategic fit. So those are sort of two broad strokes on how these funds will be deployed.
So your RHP shows that a lot of revenue has come from the US markets. Now, how sustainable is this growth considering that there are a lot of global headwinds in US? And what are the demands from other countries, say India? Where do you see that? And if the global ad spending were to reduce, how resilient is the business to take on that?
Two aspects. First, if you look at it, if you look at broadcasting and TV and storytelling and people wanting to watch content, it's a global need. So each one of us obviously are spending anywhere from 2 to 4 hours per day watching content in some forms, in some device, in some application, anywhere across the globe. So our business, till the point a consumer is consuming content in any device, we have a very sustainable business which is evergreen. As much as I think of food and health, and then I'm sure entertainment is a big part of the whole equation for everybody, number one. If you look at it, obviously, historically, if you look at US, has always been a very deep media market. They continue to be deep. But what we see is a global play. And in fact, if you look at it in the last 18 months, we've started expanding into Brazil, expanding into France, Germany, Korea, Japan, Australia. So we see this as a global play. And of course, India is going to be a big market for us going forward. What drives our business is the maturity of cloud infrastructure available and the internet capabilities in those geographies. That's what drives our business, for example. Obviously, these businesses start in the US, then come to Europe, then come to Asia. And this is something that we've seen historically in every technology adoption curve. And media is not going to be any different, fundamentally. If you look at it from a headwind standpoint, right, this is mission critical operations. Some of our customers depend on Amagi to pretty much run their operations on the cloud. So essentially, these are technologies that are very deeply embedded into their media operating environments, for example. And we see us as a global company, although built out of India for the world. That's where we see this whole opportunity. So we don't anticipate, and we truly believe the global world is available. The market is very early. The transformation is in a very, very early phase of new transformation that's happening from a video economy. We truly believe there's an opportunity in front of us.
And if the global ad spending reduces, will that affect the business?
Largely, if you look at our business has three aspects as I talked about. One is really enabling media companies to operate on the cloud. This has nothing to do with whether it's advertising or subscription. And that's a large part of a business. Roughly about 70% and above of the business is independent of advertising. It's literally dependent on the ability of our customers to operate their media operations. 30% of our business roughly is coming from ad-driven models. Essentially, our customers are ad-driven models. But if you look at it, advertising is going to be the big part of the growth area for all of the streaming businesses worldwide. If you look at it over the last few years, actually streaming, if you look at it, has moved from subscription to advertising. We've seen the likes of Netflix and Prime and everybody moving to an ad-supported model. The future is a mix of subscription and advertising. Advertising has the biggest tailwind today in terms of growth for the media companies and henceforth for us worldwide.
Now talking about the growth has been strong. And if you could tell us the sustainability of the profitability in the coming 3 to 5 years, what's your plan and what can the investors expect in that space?
Yeah, sure, Ridhima. Maybe I'll answer that in two parts. I'll give you a retrospective of what's happened in the last couple of years, and without getting into the specifics on the prospective, I'll at least give you the mental model on how we think about it. So if you look at retrospective, some of the headlines are our gross margin went up from 65 to 70%. Our adjusted EBITDA went from negative 21 to 2%, right? So we've seen a secular sort of increase in bottom line across all margin lines. We also got PAT profitable in the first half of the year. So the underpinning behind this is that a good chunk of our growth comes from existing customers buying more of the same product or more products. So what happens with that is that you've seeded some investments and revenue keeps growing. And because we are a subscription recurring revenue business, your incremental revenue always flows through to the bottom line because you've already invested. So that's why we've seen the adjusted EBITDA almost go up by like 30 points in the last 2.5 years. Now, going forward, we're not going to do anything different. I think if you look at vertical SaaS companies, they typically grow in what is called a land and expand model. You go to a customer and start increasing the wallet share. Structurally, because of this dynamic, vertical SaaS companies have very robust margins, and we expect to kind of have that same trajectory in the coming years.
Okay. As you just talked about the customer, now as one of the risks, customer concentration has been highlighted. Now, how does your base look like in content publishers, advertisers, and how will it evolve in the next 3 to 5 years?
Yeah. So I think the right lens to look at it is on a holistic basis because we provide a full stack solution because a customer could both be a cloud modernization and a streaming customer. So I'll talk about it at a 30,000 foot level and happy to answer any follow-up.
Also, how do you retain your customers?
Yeah. So two parts. So I'll get to the concentration part and then get to the retention part.
Yeah.
On the concentration, see if you look at our history, we've been in the 35 to 40% zip code, and which is considered pretty healthy for the top 10 customers. And this list is dynamic, like you said. It keeps moving up and down, so it's very hard to kind of say lock down on a number. But we are comfortable with that sort of a range. It shows a pretty de-risked business. So one customer cannot literally influence the trajectory. Back to your question on retention, I think the metric that we use to gauge retention is something called as NRR, net retention rate, which is equivalent to the same store sales metric in the retail side. It's at about 127%. Simplistically put, what that means is if a customer spent 100 rupees last year, they're spending 127 this year. So they're spending 27 more rupees. Back to my operating leverage point, that is an output of how healthy our growth with existing customers has been, and it's been in that range. And because to Bhaskar's point earlier, we are deep tech and deeply embedded in the workflows, it's not something you can rip and replace with a mom and pop shop.
And given it's also enterprise focused, right? So if you look at it, we're very comfortable with the concentration that we're seeing today, largely because these are large enterprises that we work with. So and that also drives stickiness for the whole business as well. So these are some of the largest media companies in the world. And we are doing about 45% of all the large public listed M&D companies are our customers already. That essentially tells you that we want to build more and more expansion revenue from them, like what Vijay is pointing out. And that's where the stickiness exists as well. So to that extent, we are extremely comfortable with where the concentration is today. And going forward, I think it's the same sort of range and zip code that we look at. I think we are very comfortable with that.
You're operating in a very competitive space of global ad tech. how do you differentiate yourselves from your global peers, and how will you sort of manage with the the more players coming in the industry?
One section, maybe I'll try to give a more business view and then look at the finance. See, we are not an ad tech company. We are a company supporting media operations for customers. So if you look at our business, although our customers make money through advertising, we make money through providing and operating software through which we actually make money. So we're not an advertising company in that sense of the word.
Yeah.
So our competition, if you look at it in the sense, are hardware companies which were building legacy hardware for supporting media operations in all your real estate and various studios and others. Example, is our competitors. Our competitors are new cloud companies which are trying to build software. So we don't compete with the ad techs of the world. So we don't work, we actually partner with the multiple different ad technology companies worldwide, the likes of Trade Desk and Magnite and others. And so we don't compete with them. We actually partner with them. So we are more of a media operating system rather than an advertising technology company.
Just to add to what Bhaskar said, there's two things, Ridhima. So one is we are the only full stack solution that sets us apart from competitors, because everybody else is kind of operating at a certain segment. We've disclosed that in the DRHP. And earlier, we are mission critical as well. So once you get deeply embedded, there are live games and news and everything runs on us. So you can't, those are, you need a product that's of enterprise grade to be able to run it, and it's not trivial to run live operations in the cloud. So those are two broad strokes of what sets us apart from competition as well.
Understood. How will you leverage AI and technology? Because the space, every industry is seeing disruptions with AI.
Absolutely. I think AI is a big transformative force. We are very excited about the whole AI opportunity. The reason is a couple of things, right? If you look at the media business largely, and I'm sure if you've seen it all, TV is both, if you look at it, technology cost. If a technology cost is 1 rupee, you're spending on human cost about anywhere from $3 to $4, 4 rupees, right? That's what you're spending today. Now, if you look at it, that's the opportunity where we see a lot of agentic AI infrastructure starting to come in. At Amagi, we're investing heavily. The last 3 years, we've been investing in AI as a big part of it. A good amount of our R&D investments is going into AI enablement for our customers so that their workflows will become completely automated. And we've already released products in the marketplace, and we're seeing significant amount of traction in terms of the whole AI business going forward. So it's a big opportunity for us, an amazing capability for us to go transform the media business.
And could you throw more light on what has been done so far? And
couple of things I can talk about. One is we launched a scheduling system. If you look at a movie channel, when you're scheduling movie channels, now humans, all of us will sit down and actually schedule it almost on a 9 o'clock, 10 o'clock. You're kind of really doing that on a regular basis. Now machines are much better. They can understand social signals, they understand viewership, they understand birthdays of stars, being able to pick all of that together and actually create the schedule themselves. And obviously we need a human in the loop to approve it and do all of that, right? So clearly we've been able to build significant benefits for our customers, where a customer who's doing one channel, one person a month, now is doing anywhere from 6 to 8 channels a month. That means there's tremendous productivity gains that we see. Second thing is we launched some social sharing systems about 4 months back, which essentially enables our customers to literally be able to create the social sharing tweets and Instagram Reels and Facebook posts completely autonomously. That is, systems can actually understand your videos. So as live TV channels are running in news, for example, it understands the news content, extracts the feeds directly, it creates the tweet automatically, and is ready to post for you. We truly see this as a transformational technologies which can actually reduce the cost of really building operations, creating new opportunities to tweet more, maybe personalized for everybody. And those are opportunities I think these mission systems are going to really drive. So we are very excited about this opportunity, and in fact, we're investing heavily as a company into those capabilities.
Lastly, my question to you is that what's your long-term vision for the company, and for the investors investing for long-term, what should what's in there for them?
Yeah, I'll probably start and then Bhaskar can add. We look at our growth strategy. So media industry is still in its very early days. Our software sits on the cloud. Only 10% of it has moved to the cloud. So there's 90% runway for media operations to move to the cloud. That's an important data point because a lot of growth is ahead of us. We take a three-pronged approach when we think about growth. It's that in our documents as well. We call it win, expand, and extend. So the first part is winning more of existing products with our current customers, and just doing more of what we are really good at on the media operations side. Expanding is with the same customers, like I said earlier, the retention rate being so high, is to go to adjacent sort of offerings and then just make sure that we grow that as well. And the third part is the extend, which is to your earlier question on when is the other geographies going to scale. Once you've created a playbook in the Western countries, rinse and repeat that in new geographies that like the India and the LATAM and other stuff that Bhaskar alluded to. So we believe for where we are, and given that we are a full stack solution, a lot of the growth will come along sort of these three building blocks. And with AI stuff that Bhaskar articulated and the 4x magnitude of the spend, we believe that the runway is pretty compelling, and we are sort of at a pole position to capitalize on it.
AI and automation is going to be the biggest trend line there. I think truly it's going to change the way it is. And as Vijay pointed out, less than 10% is really on the cloud today. The movement to software and movement to AI-based automation is the biggest growth area for us as a company. We're excited because we are at the forefront of this whole technology to change. Being in India and being able to serve to the globe has been a very, very interesting journey for us because it's a global play. We work with some of the who's who of the television businesses worldwide, and yet when people are watching Olympics in the US or when they watch their NFL games, there's a touch of India in all of that, where it's coming from Bangalore. Something is getting done, which is actually driving these international events today, be it a La Liga match or an Oscar or a Grammys. All of that has a touch of an India technology that's driving this change across the globe today.
All right, thank you so much for speaking to NDTV Profit.
Thank you.
Thank you very much.
Pleasure.